There's no doubt the next couple of years is for a promote-oriented carried interest business. This is the time. And this is one of these great vintages where, because you've got massive value shift and changing, not only because of interest rates, because also how real estate's being used. So you've got lots of problems out there. At the same time, you're relatively liquidity constrained, not that much capital, and finance being constrained. So this is, clearly one of those great. So I'm excited to say this is time we can make a lot of money. And we have the benefit of having been in the markets for 30 years. People have been with us on average 10, 15 years, our senior management, 15, 20 years. And so we have that perspective and the ability to say, okay, is it residential in Germany today or is it a hotel in Rome? And make that kind of, rather than if you're only in a sector, of course, that's what you like. Well, that sector isn't always necessarily the where you should be deploying money.
Welcome to the People Property Place podcast. Today we are joined by Van Stults, founding partner of Orion Capital Managers. Privately owned, Orion is a leading European real estate private equity firm founded in 1999 by its three partners, Aref, Van and Bruce. With offices in London, Madrid, Milan and Paris, Orion operates across major European markets, leveraging its local presence and extensive network to identify and capitalize on outstanding investment opportunities. Van has had a phenomenal career spanning more than 40 years. And prior to setting up Orion, he was a member of the board of directors of Lasalle, a managing director, a member of the operating committee, and head of European investment activities. Van also established Lasalle's European offices in London and Paris in 1990. So Van, welcome to the podcast.
Thanks, Matt. Good to be here. Look forward to this. Hopefully it's entertaining.
I'm sure it will be. I've got a good feeling about this.
All right, good.
So look, a place we always start this podcast, and we'll get on to Orion and your career and how you see the market and capital raising further in our conversation. But a place I always like to start is how and why did you get into real estate?
Well, actually, most of the things in my life have been not necessarily by design, which I'm not sure sounds all that clever, but but when doors opened or things happened, I followed and went through them. So I started out really as a financial guy. My father was a banker, and so I grew up in Chicago, went to Claremont McKenna, but then came back to Chicago to go to Chicago Booth for my MBA for business school. And I did that while working at First National Bank of Chicago. So I was just like a banker finance guy getting my MBA at night. And then my career, I've always I never really liked big organizations. Some people are really good at big organizations, and I'm just better at smaller things. So I went and worked for a family office, unfortunately not my own family, but a wealthy family in Chicago that one day the head guy said, let's get into hotels. And so I just started, he said, Van, why don't you start working on these? So we bought some Holiday Inns, in Sheratons in Chicago and Florida and stuff. And I said, man, I really enjoy this hotel business versus the pure finance.
Because it was a physical asset? Or
yeah, the physical asset, the sort of, you're like a commercial tourist, you're like, okay, what's happening in the city? What's going on? Why is it good? So you really, real estate is tangible, but you do become, I like what I call a commercial tourist. And I always liked traveling around. When it's like in my high school and college things, I used to lead wilderness canoe expeditions, like up in Canada and all that. So I was always a guy that was sort of, on the move and sort of exploring new things. And so I just gravitated to the real estate, and I really liked that. So when I was working with the family office, it was great, but it was their family and their office. And so I decided I really need to get into a pure real estate business. So I went to Lasalle in 1984 because it was small and entrepreneurial in real estate, and you could become potentially a partner. It was a partnership. So go from being an employee to potentially someday into ownership. So I always gravitated not just to real estate, but also places where kind of it was, more small and you could maybe get into ownership. But it's so purely by accident. And
no,
accident.
You said your dad was a banker, but you had no other family in property or real estate?
My grandfather, who's a huge guy, my father's father was in sort of farm real estate in the Midwest in the US and went bankrupt in the Great Depression. So that wasn't really
so that didn't inspire
not very
you.
Auspicious, no. And so my father was always kind of anti-real estate in a way. So no, we didn't really, but he was, farm real estate, I guess.
And so you started in hotels, the family office.
Yeah.
Did you expand into other sectors, or was
I went to LaSalle.
Yeah, but at the family.
No, at the family office was called family called Lane. No, we were just had the hotels, and we just had these middle market Holiday Inns, Sheratons, that sort of stuff. When interest rates at that time, went up to like 17, 18%, which is hard for people to imagine now. And we would buy preferred interest in these hotels. We had this great lawyer who said we'd buy like half the hotel. So it's like buying half the orange, but getting all the juice. And that was a good gig.
And you didn't operate them?
We did. We had a thing called Lane Hotels, and we were operating them, and we were like a franchisee. It was very basic, Holiday Inns and all that. So anyway, I love that. I thought it was great.
And so you moved to Lasalle.
I moved to Lasalle in 84 just to get purely in the real estate business and the chance to be in something over time where you could get into the ownership.
And did you expand your kind of investment horizon away from hotels at that stage?
Oh, yeah. I was a deal guy. And so I was just working primarily Western U.S., just working on whatever. I mean, I bought an office Union Bank building in Long Beach, California, which wasn't a great deal, and, a whole variety of stuff. And so when I was at LaSalle, the good story was and Roger Aref at El Palo will remember this well. It was the best deal I never did, which back in the late 80s tried to buy the Sears Tower in Chicago. The Sears Tower was 3.6 million feet. I was with LaSalle. We were trying to do it with Prue. And Sears was moving out and selling it themselves. So they were moving out of 2 million feet. So you had 50 floors of 40,000 square feet each going empty. And so we came, and this is a great, I won't take too long a story in and of itself, but, and I worked with a guy, Dan Cummings at the time, who went on to be at Bain. And so we actually negotiated with Kevin Maxwell, you're too young to know, who was Robert Maxwell's son, to lease 2 million feet to Maxwell Communications. On the back of that, we bid $1 billion to buy the Sears Tower in 1988, and thank God lost it to AEW, who did a convertible mortgage. And within months, Robert Maxwell did the disappearance thing. So we would have been wiped out. We would have been wiped out within 6 months of buying that thing. We would have been blown out. So that was one of the great stories from the 80s. And LaSalle at the time was run by a guy named Bill Sanders, who was sort of the Pied Piper of real estate and went on to form Security Capital. And it was a great education. It was a great place.
And so you got to learn from some phenomenal people.
I learned a huge amount working at the family office first, because the family office, the Lane family, before LaSalle, because the money was real. And I mean, they said they threw around nickels, 5 cents like manhole covers. They really negotiated everything. And we had, of course, were taxable, everything. So I really learned a huge amount working with that family office. Money was real, how to negotiate, taxes, structuring, everything. And then moving on to LaSalle, I really learned the real estate. I learned a lot as well, but I really learned the real estate and organizational skills and sort of the real estate business in terms of institutional investment management, fund management with LaSalle. And as I said, I was just a deal guy from 84 to sort of 90, working on a variety of deals. And I don't think I was exceptionally good, but I was a good player. And have you ever seen the movie Sliding Doors?
I haven't.
It's not a great movie.
I've heard
It's not a great movie, but it's a good concept. I like the concept with Gwyneth Paltrow, who does pretty well playing an English woman. And it's about where she goes to catch the tube, and one life she makes it, one life she doesn't catch the tube, and has two completely different lives because of missing one thing. Well, anyway, I had this sliding doors kind of moment when the head of LaSalle, so Stuart Scott at the time, on a Friday afternoon came to my desk and said, "We're going to open an international office. Do you want to go and be the first man to plant the LaSalle flag in Europe?" And at the time, I was looking to move to be LaSalle's guy on the West Coast. I was house searching San Francisco. So it was like, so this is a huge. Anyway, I said, sure, why not? Let's go to London for a couple of years. It'll be a jolly, and kind of what the heck. And so that was 89, 90. And 33 years later, I'm still here.
So why did he pick you?
So again, it wasn't by design. Like, oh, I didn't want to go into real estate. Oh, I want to go international.
But you just followed your nose and took the opportunity.
Yeah, you said, well, if something seems exciting and energetic and opens up doors and life is interesting. Like I said, I used to do these canoe trips in the Canadian wilderness or whatever. So it's things like it was an adventure, right? It wasn't some great career design.
Why were you chosen? You said you're like a good deal guy. You're probably being modest, but
that was accurate.
Why do you think you had the tap on the shoulder and given the opportunity to go and set up an international office?
Well, 2 or 3 things. I mean, I've got maybe more perseverance than brains. And so I'm incredibly, I never sort of give up. I hate to lose. I'm a really bad loser, which is something you got to get over a little bit. And, I'm incredibly reliable, and I had the LaSalle sort of ethos and culture and everything. We'll talk maybe about that later in terms of culture. So I think they felt I was the right guy to carry the flag in terms of, the LaSalle sort of image and culture and things in terms of you coming to Europe.
So,
and again, I proved to be more perseverant, I think, than clever in the early days.
So talk to me about the early days in the 90s in London. You're off,
well,
off the
first
plane.
of all, I mean, Matt, international real estate was a new concept. I mean, in terms of, clearly equities and all the other financial instruments were globally investing. I mean, if you're doing an equity portfolio, you do it globally, but real estate at that time was pretty well, real estate capital was local and not really crossing borders. And so this was 1990. A company called JMB had come over and done a deal called Ransworth Trust, which cratered right away. And so they were out of Chicago, Neil Bloom. And there were a group of us that sort of came over at the same time. So Roger Aref at Goldman, and you had Keith Breslauer, you had P. Riley, you had a group of us that sort of came over all at the same time. And a lot of us still
stayed
here. Yeah. So Breslauer. And so it was a good adventure. But at the time, you were really trying to sell something that was very new. So one, international sort of cross-border real estate was a new concept. And secondly, sort of the sort of LaSalle name wasn't known. When I came, who was LaSalle? Nobody ever sort of heard of it. So it was really trying to sort of grow plants in a desert in a way. And then Ransworth Trust cratered, which made it doubly hard. But very fortunately, two or three things. I realized, which has been a key all throughout the careers, it's very important to know, it's not like Donald Rumsfeld, but to know what you don't know. And so I arrived very sort of naive and relatively ignorant in terms of the market here. And so fortunately, Aref Laham showed up on my doorstep shortly thereafter and joined me, as did Bruce Bossum. So, got people that knew the market.
And they were local.
Yeah, Aref had been working in the French market. He'd been working a French shopping center, CGC, and Bruce had been working with Mountley for a number of years, and before that was Jones Lang Wooten. Never be the third name. The third name always disappears. So I two people that knew the world, knew the market very well, and great people, and obviously we're still looking into that, but that was really fortunate. We'll talk about that. And then early on, it was really Aref and I drove a few different ideas, but we formed a joint venture, very fortunately, with the Grosvenor estate. And so LaSalle Grosvenor sponsored a fund to bring, and Grosvenor wanted to get into the fund management business, and we wanted to get into the UK market. So it was a sort of a mutual usage relationship. And at that time, Jeremy Newsom was running Grosvenor, and Mark Preston was kind of a up and coming star. And that was a great relationship, and we had that fun, and that worked very well. We've been great friends ever since. And so early on, it was about creating the relationships and working with the people in the network to get things going versus like, I'm just going to do a deal. Right?
And so it was US capital into
US
the
to
UK
initially.
Europe.
Initially it was US to UK.
So you weren't involved with the capital raising piece. It was just heads down.
It was me. And there was a guy named Bob Underhill, and then Aref. So yeah, I was doing everything. Right. So, LaSalle had, it wasn't known here. And in the US, okay, they had relationships, but I had to go to those relationships and try and persuade them to come to the UK. And of course, with the Grosvenor relationship, that made a huge difference. And then it's saying, okay, it's not just LaSalle, but you have LaSalle Grosvenor and going into the UK, and you're well shepherded it. Right. We marketed to everybody. Amazing marketing trips.
Talk to me about the first few deals that you did.
Well, we did some deals that were okay. We did a thing called, what's interesting, we did a deal called Friary Court in London, which was a okay deal. But, you look back then, the rent, I remember, was like 40 pounds a foot. And like 30 years later, the rent was still 40 pounds a foot. So now they've moved on finally in the city because of costs and all that sort of stuff. But you learn that the city rents are up and down for a while. We did we did a deal called Fleetway House. We did a deal. So the deals were okay. And we did all right. But from then, we really branched out. And, Aref, my partner, I've been super lucky that he's a phenomenal deal guy as well. And so on the back of working with Aref, he wanted to move to Paris, which we said, yeah, let's do it. And so he moved to Paris, and we created a thing called Francilien. And Francilien was Paris office buildings, which we were buying back then at around 7 to 8% yield. You could borrow at 5-6%, so you were getting like 14% cash on cash. And that fund, Francilien, did like a 50 to 60% IRR, and that was quite phenomenal with like 4 or 5 investors. I also hired a guy at the time, Rob LaForce, in Amsterdam, and we created a securities business because Lasalle had that, a REIT business in the U.S. So that did reasonably well. So we had a variety of things that started to really make good money. We did the first NPL portfolio, again headed by Aref in Paris, where we bought Barclays Bank real estate loan book NPL. This was sort of early 90s. And so the 90s went very well. And so for Lasalle, we built, we opened so we were in London, then we opened in Paris, we opened in Amsterdam, we had zero, and then we grew to about 5.5 billion euros under management. And it was good. We were making, good. And I know a lot of life lessons. At the time, I was really looking at people like Apollo, Blackstone, Colony that were coming out of the S&L crisis in the US and really were at the nascence of the opportunistic sort of private equity business based on promote and carried interest. And, I always thought that was the holy grail. I thought that for me, that was the sort of top of the food chain. And so we modeled our business in Europe, Lasalle, as sort of the private equity sort of model. And so I remember going to Stuart Scott, the chairman. I said, well, we've got to get people, they got to get a percentage of the promote if they're doing the deals. You got to create a promote structure. I remember Stuart was a big guy's like, I'm not having any of that, none of that. You could only make money through the shares. Sal was public at the time. And so that was a real battle, but we actually did then achieve creating the sort of private equity structure, which is where we always sort of aspired to.
And that was right from the genesis of Lasalle in
No,
London?
that was sort of, we came in 1990 and that was sort of 94, 95, something like that.
So talk to me about, did you have kind of particular funds? How were you structured, or was it separate accounts? How was the...
No, the first thing, I always aspired to the fund business. When I first joined Lasalle, I won't name names, but I first joined Lasalle, part of it was because they've gotten the account with CalPERS. And I used to go out there and present as a non-discretionary separate account. In other words, you go to persuade on each deal. And that was painful. And so I always aspired to have discretionary fund capital. So when we did the Francilian Fund to Paris, that was sort of discretion in a box. In other words, you could do Paris office building or certain stuff. But we did do also accounts with Cargill and Lehman and others. But the idea always was and UK Realty Partners, the one we did with Grosvenor, that was also discretionary fund across the UK. So discretionary funds, pool of capital.
Pool of capital with a particular mandate, return profile, and horizon that you're going to be investing across. Right. Yeah. Talk to me about Orion and why did you want to set the business up? Because you're clearly onto a good thing with Lasalle. You've expanded it just shy of 6 billion in terms of deployment.
Lasalle was great. I love the people. I love the organization, the quality of it all. But as I mentioned when we talked earlier on, I don't thrive in huge organizations. I'm politically okay, but not. Some people are very good at that, and some people have different skills. And so when I joined Lasalle, it was 150 people, a relatively small partnership. And then went public. And so that sort of changed things, neither good or bad, but it changes things quite a bit. And then came the 1999, the strategic merger with Jones Lang Wooten. And which, fine, I understand it because the idea to become global. And I won't go into a lot of details of that, but that transformed it to becoming a large global organization. Changed the whole dynamic. And I'm not saying good or bad, but one that was no longer as exciting or interesting for me personally. Great, fine for JLL. And so that was, again, so it wasn't necessarily by design. That was the catalyst that said, okay, this is not sort of the house I wanted to live in originally. Now this is a whole different thing. So, and Aref sort of felt, the same way, and Bruce sort of felt the sort of the same way. And, we started here. It was always kind of the three of us. We were always sort of the three musketeers or whatever. And so we started having conversations and saying, well, we did it for ourselves initially. It was Lasalle, but nobody knew Lasalle. And so let's do it again, but this time for ourselves. So we had these conversations and in 99 and decided to create Orion. And the mission, the premise has remained consistent. We've always been the three of us, which is why I've been fortunate. We've been aligned all these years in that we've always said, all right, our goal in life was to try and be a pure private equity real estate across Europe and trying to be a leader in terms of performance and as just a great place to hopefully work for not everybody, for the right people. So we created Orion in 99 with that objective to try and create a pure play real estate private equity pan-European firm. And this was also kind of at the naissance of the euro. And so that also kind of all combined is we would be a euro denominated, and we would differentiate ourselves by really being on the ground in the markets. So from day one, everyone knows, of course, the movie The Field of Dreams. And so the idea with Kevin Costner, the idea, build it and they will come. So the idea is, well, all right, we'll create this thing. And so we opened offices in day one. And I think that's an important thing for business. A lot of people, when they came from the US, didn't really invest, like, oh, we'll come to Europe and do Europe. So I hire a couple people, but they don't really invest in the structure and what they really need to do to really be a real presence here. So we opened, Matt, day one in London, Paris, Milan, and in Germany, and all Regis offices at the time. And I'll try to make a long story short, but I knew a guy who used to work for me way back when at the family, who was at Citigroup Travelers. And Citigroup Travelers committed 100 million sort of euros to, before Orion even existed, for our first fund. If we raised another sort of 100 million, they also provided working capital, and they also provided bridge money to do deals to sort of get the thing going, in return for getting some of the promote of Fund One. And they got too much of the promote, actually. but that was a good arrangement. So we owned our business. They never had any ownership, but we had the capital right away, so we could go to the world and say, listen, the train has left the station. Do you want to? Yeah, I was going to. You want to get on board?
That was a question about how would you set up 3, 4, 5 offices at once and raise capital? So you had, from a previous relationship, they'd seen what you've done with Lasalle across the UK and Europe.
Yeah, and he'd worked,
and wanted in.
It was like you and I have worked together before, and now you're at this big institution, so we knew each other and worked together. So we had years of relationship. So this is a guy who, we knew each other and trusted each other, and he, thought he could make good money on this deal, which was a good deal for Citigroup Travelers at the end. There's a longer story behind that. I won't get into too much anyway.
So it's kind of, you raised a discretionary fund, 200 million, was it? And he kind of committed.
No, we raised 500 million. So we had a hard cap of 500 million. So on the back of the Travelers' money and others, we raised the 500 million for Fund One in whenever that was, 2000. And off to the races. So,
talk to me about your role at Orion then, Bruce's role, and then Aref's role. How did you split your roles and responsibilities, and who was?
I mean, that's
what?
Evolved a lot over time. That's a sort of a long, sort of complicated thing, but we've always had what we've called overlapping circles, right? So it's an organization. And again, we're 45 people. We're very proud that people have been with us a long time. We've been together a long, long, long time. And so I think it's, for people in their careers, all through your career, it's very important, hopefully, to recognize your personal strengths and weaknesses, and hopefully to complement those with other people rather than try and duplicate them, and then to acknowledge when those come into play or don't come into play, and reward it when it does. And so you need to really hopefully have enough self-awareness of others to adjust the roles. And so early on, we were overlapping quite a bit. Over time, it's evolved dramatically. Bruce knows everybody and everything in the UK, always has. He's always been very strong in asset management. I was doing a whole variety of things, including investment and the finance and investor relations. Aref was doing everything, but Aref over time, as it's evolved, Aref is sort of, in my opinion, one of the great deal makers of the industry throughout. And so over time, he really became the CIO and led the acquisition effort, although we all get involved in various deals depending. But that has become even more the case over the last sort of 7, 8, 9, 10 years. I am, Chicago MBA. I grew up as a finance guy. And so, better or worse, I inherit then all the financial operations and the investor relations, as well as certain deals and other situations. So that's kind of in the overlapping circles. And now, we're still full on. I'm not 30 years old anymore, but I mean, as you can tell, I got a lot of energy. I love what we do. But we also brought 4 other not younger, they've been with us on average 15 years into the partnership. And so we still own the great majority, around 80%, but we're slowly but surely starting to shift, to version 2.0 or the next generation.
Amazing. So you raised £500 million. You established all these
Euros.
Euros. You established all
Euro
these.
business.
You established all these international offices.
Right.
The idea was what, to go and source deals directly yourself, or were you going to work with local operating partners, or how or were you going to kind of JV with other businesses? What was the kind of the strategy and how?
Yeah, no, it's again, what's your sort of culture and what's your sort of USP or differentiation? And you used to use USP right then. And so we had a number of differentiating features. One is we are first kind of hands-on value creation real estate people. So by being in the markets, we were able to source not only at a high level from the partners, but also locally. And then secondly, we were never really viewed as foreign anywhere. So we've been part of the fabric. In Italy, we're Italian. We're, in France, we're French. And so as a firm, Orion is, we're not, people say, oh, you're an American company. And I said, I don't know what we are. We're our own culture, but we tend to be local and we tend to be part of the fabric of what we're doing. So we can source at the high level, which has been much more since sort of the financial crisis, but also the combination of that local sourcing. And then Matt, risk control and being really on it in terms of value creation and asset management is a key part of sort of the Orion thing. So a lot of what we've done over the years is value creation. We're really a value creation machine. If we could do it without having to work or make money, that'd be great. And so, which is more of the market we're in now. I mean, now I think you can make a lot of money without doing as much work. But the differentiation is we're financially sophisticated. We can do NPLs or public to private or this, but more importantly, we have real estate skills and value creation skills that maybe other firms don't have or don't. And so being local enables us to really be right on top of the risk and implementing that.
And in terms of the asset classes that you were deploying capital into?
I mean, early on, the industry was, back then, it was mostly offices and retail, and that's kind of what those were the main food groups and logistics. We were doing logistics early on. We were building logistics way back when. And so we did a lot of office, sort of what we called forward fundings, where we commit and buy it in, but we take the leasing risk and commercialization risk. We were doing a variety since the beginning. I mean, Aref started his life as a retail developer for CGC. So we, always been quite strongly comfortable sort of retail development repositioning. So we did just a variety of things, but primarily those sectors across Europe. Consistently made money. We made a ton of money in France in the early on. We were very heavy into the French market. We've been in Italy for 22 years and consistently made money there. We opened our office in Spain in 2009, so right at the GFC, and that was very good. Made some money again in large retail. We sort of stayed in the. I will say, Matt, that in private equity, it's about you want to exit and you want to make money in the exit at the end of the day. So we stayed in the deeper Western European markets where you thought at the end you can, when you've done your work or whatever, you can realize it and sell it at the premium cap rate. So we've stayed in the main France, Germany, Italy, Spain, and the UK.
Just because they're more liquid?
Correct. In the main cities. Right. Because you want to sell. And you want to, when you've done something, you want to get that premium. And so if you want to, at the time, maybe capture the, what back then, 4.5 cap rate or 4 cap rate or whatever, you want to be in those deep markets where once in a while there's that investor that says, all right, I want to have a Paris office and I'm going to pay, the top sort of core price.
Who were you competing with at the time when you set the business up? Was it as sophisticated? Were there as many international investors?
No,
or was it much more kind of localized?
I shouldn't say it was easier because it was harder in different ways, but it was much less competitive and much less sophisticated. So, early on you had people that are like not around now, O'Connor and J&B, and Blackstone has been there consistently, and they were doing logistics early on and platforms. It's shifted around quite a bit. It's shifted around over the years. And I should have a more succinct answer, but it moves and moves and grooves around.
What was the hardest thing in terms of setting the business up at that time that you had to kind of overcome?
Well, in the beginning, a story when Lasalle found out I was creating a competitive business, I was U.S. style escorted out of the office. And so the next day, I went to a Regis office with my credit card. And, said, okay, I'll sign up and create an office. So, then you're like sitting in a taxi with a meter running on your credit card, so time becomes really intense, right? In terms of getting things done in terms of time. So the time pressures feel quite dramatic. But otherwise, it's all pretty exciting. And, you're super energized and you're thinking you conquer the world. And so it wasn't, I think something's really hard or really, I think there's, really important 2 or 3 things. It's like any enterprise is you have to say, okay, I've got a vision, really clear vision of what the business is going to look like. And the business ended up really looking, pretty well exactly like what we envisioned. And then really clear, like, what resources do I need to do to implement it? But we'd done it all before. We had done all this already
on
as
someone
LaSalle.
else's wallet.
Correct. And so, that template was all there. And so it was really a matter of just really racing hard to get things done. So it's pretty exciting. I mean, you got to get the right, it's a cliche, but you got to get the right people and everyone on board on the same path. I should make something sound harder than that, but it was,
Was that a real challenge, the people aspect, in terms of getting the right people in the right local markets?
It shifted
with the right
quite a bit over
experience?
time. So no, initially, I mean, it's it's kind of an exciting story. Say you were kind of going to come in, get a piece of the action. You can be the sort of what really changed and evolved over time is initially when we set up in the various countries, those country people sort of viewed themselves as maybe not separate profit centers, but sort of whatever. And I think that was not, over time it evolved to say this is much more one thing. You're not really trying to create emperors in various...
And compete against, France and Italy.
Compete's not the right word, but I mean, it needs to be much more all together, which is what we, for sure, Orion now, it's very, and people move around and do different things. It's not as siloed. It's not as competing. It's not siloed right now. It's very much one organism. People move around, work through the different markets. So I think getting that right over time and how rewards are shared and how people are comped and all this to make sure that these are not silos. This is one organization. I mean, if you're all sitting in one office, that's quite easy. And we've gravitated to more of us are in London now than, proportionally than in total. But organizationally, you want to be very much all rowing together. And that's another great strength of Orion, is that I think it's an organization that's a very collegial, people supporting each other, that we're all in it together, which is why one of the reasons that people have stayed a long time.
And I guess one of the things is, I mean, if Italy's not hot at the moment, you're going to deploy capital there, right? But you might be channeling it into France, but you want to keep your Italian team happy and part of the action, as you said, and aligned. So when the market does come up or when the opportunities do present, you can kind of pounce and take advantage of it.
Yeah, I mean, you've hit a key point, Matt. Like at Fund 3, which was sort of was right around the financial crisis, 8, 9. We didn't do a lot in Italy, but we've got a great team there, great people. So when it comes time for like promote allocation, reward allocation, you're going to say, okay, yeah, we're going to reward Italy, even though because they did everything right. I mean, the team is great, but just for that point in the cycle, Italy wasn't the thing. And so over the years, we've tried and I think fairly successfully, to make sure you're right. Just as you said, you keep the players on the pitch where you need them because you never know. And now we're doing a ton in Italy. Quite successfully. So.
And do you, as a business, do you work with operating partners?
Oh yeah, I never really answered that actually. I flirted around it. We're not a sort of an operating partner model. There are firms that are saying, okay, we sit here in London or wherever, and it's a model that's perfectly fine, and we're going to use operating partners. And so we're much more of a sort of an incentivized. We have incentivized relationship that help us in different situations and sort of horses for courses. So we're not an allocator operator model. We're a very hands-on control freak sort of business. And, but having said that, we use partners and groups around Europe to help us implement whatever it may be. So it might be a construction company that's our partner in Genoa, that they're in for X% and they're going to get a certain incentive or it might be a project management firm in Edinburgh who again has certain incentives. And so there are different structures for different situations. So one of the advantages of being around a long time is obviously people a long time and those that can work with you and really support you. But it's more of, I'd say, an incentivized relationship model.
Yeah, rather than just working with operating
partners.
Yeah, we don't
say, okay, we have this operating partner in Italy, that's what we use.
Yeah.
No, it's deal specific. You bring in those resources that you need, and then you create a relationship that incentivizes them. So maybe they're making some investment, maybe they have some ownership, maybe they have no ownership, but just some kind of promote or whatever.
Yeah.
You're trying to mitigate the downside risk, and so it's a fairly complex thing. But it's this network of people that you work with for a long time that can deliver.
How many funds have you raised over the years?
For
Orion specifically.
Orion, no, we've had 5 op funds and we had this one sort of income fund, and we're raising fund 6 now. So total deployed, We've investment total is a little close to 11, 12 billion. Total amounts raised 5.5, 6 billion of equity, or from around the world. It's evolved over time. Historically, it's been about 55% U.S., another 30% or whatever Europe, and then some Asia and Middle East. It's been historically around a third foundations and endowments, another third sort of pension, and then recently it's grown in terms of high net worth individuals and then also sovereigns. And it's shifting around.
Just in terms of the allocation into real estate, or working with you in terms of the type of institution that will back you, you say it's changed. Has that nature changed, or?
Yeah, I mean, we sort of expanded it quite a bit in 08, 09. And so initially the foundations and endowments and a couple of sovereigns were a big portion of it. As I said, the high net worth individual has increased, pension has increased some. I expect high net worth individual to increase more going forward. I think U.S. to Europe over the next few years will be proportionally less than it's been.
Because
of sort of, I don't know if you call it challenges and opportunities. I'd say first challenges in the U.S. So I think the U.S. market is a bit of a train wreck. The office market is a disaster. And so a lot of U.S. funds are sort of self-absorbed into what's going on in the U.S. Secondly, they're sort of maybe the flip side of that is they think, well, maybe there's an opportunity in the U.S. Maybe we don't do internationally. The dollar euro hasn't worked to their advantage to the extent they don't hedge the last 7 or 8 years. That might really be, you really should say maybe you should come now because of maybe the currency is going to be more favorable towards them going forward. But a number of them don't like the currency noise. And then you're going to see, I think, increased. And then the other side is just going to be more capital from Middle East, Asia, and within Europe itself. And I'm talking about for opportunistic, for higher return.
Yeah.
I'm not talking about the core.
Yeah. And why is that? Why more Middle Eastern and
Well,
UK
Middle East is
Europe?
just more money. So the money keeps pouring in.
Just diversifying away
Well,
from
I can't
oil?
invest in a region. So, I mean, the U.S. is a huge market in and of itself. And so you could make the case to say, okay, I can deploy within the U.S. I don't, do I need to go somewhere elsewhere in the world or not? I mean, I think Europe offers certain advantages, but I'm biased. But if you're in the Middle East or you're sitting in places like Malaysia, whatever, you need to invest outside your own country because you've got more capital than you can effectively deploy in your region.
Yeah.
So, and then you go, and there's Europe, and it's very looking good.
And can you just talk to me about why some funds can raise capital in this current environment and why others really struggle?
Well, we're looking at the toughest capital raising environment I've ever seen, Matt. I mean, it's extremely challenging now, and I think it's because of a lot of investors are questioning how does real estate really work and how does it fit in their portfolio? Because the change now, I mean, real estate is a diversifier. Real estate is still critical. The consultants will still advise on it. Having said that, the fundamental shifts in how real estate are being used, first the retail shift in terms of e-commerce and now the office work from home, has made a lot of funds saying, okay, but how do I really play this? What's going on? So I think there's a bit of a pause right now, which has made capital raising extremely difficult in terms of people examining how to best, which is an opportunity. I mean, that's why there's great opportunity today. And so I think right now, in my view, those that raise capital, the money is gravitating more towards larger, generally.
As in larger shops?
Yes.
And why is that?
Because one thing is I say, when you go raising capital in the U.S., it's a sea full of fish. There's lots of investors, so you can fill your net with fish. If you start raising capital in the Middle East or Asia, it's more whales. And so in other words, they're much larger investors, fewer of them. And those larger investors, by definition, if you're going to commit $200-300 million, I have to commit to a $1 billion, $2 billion plus fund. And so the type of investor means that there's a great proportion of money, is going, because the fish are less active right now. And the whales are still sort of there, and the whales, because whether it's petrodollars or sovereign funds or whatever. And so those raising capital have to, one, I think, sourcing network deploying right now is more important than ever. So like our organization, the fact that we have a network for many, many years, I think you have to have incredible key strengths, whether it's, in our case, it would be the sort of value creation skills and the ability to do sort of negotiated, structured transactions. So But it's an extremely challenging time to raise money. There's a lot of inertia out there, which is always the way, which means it's a great time to deploy. It's going to be a primo vintage over the next couple of years, for sure.
Talk to me about Fund 6. How much capital are you looking to raise?
Well, Fund 6, our last 3 funds have been 1.5 billion euros. Fund 6, we have a similar target, sort of the 1 to 2 billion. We're looking for initial close in the next few months. We'll see, but in the X 100 million range. It does, I say, people move with certain slow and inertia, but we're in that similar size for us. Will be in that 1.5 to 2 billion amount. I think it's going to be a bit like the global financial crisis, not in terms of opportunity set, but in that there's less debt available. I mean, that's part of the opportunity, is that obviously debt is much harder to come by. So you're going to need more equity to do deals. Back in 08, 09, we were doing deals all equity, and then being able to put financing on, 18 months or 24 months later, which then hyped up the returns. And so I think you're going to see, and we could talk about sectors, whatever, but in the residential sectors and others, you're going to have a lot of rescue capital or be able to initiate deals all equity. And so your fund size may be 2 billion, but the GAV may be a bit less because you're going to have much lower. I mean, our Fund 3, after the financial crisis, had peak LTV of only around 30%.
Wow.
We did really well. I mean, the fund did great, but it just because, which was, a lot of people say, oh, you can't make money opportunistic because you can't get the debt. And I'm like, no, it's the exact opposite. I mean, if you can do deals all equity and underwrite them to a sort of low teens IRR, that's quite phenomenal. And if the debt comes on later, then you're hyped up.
Talk to me, opportunistic returns. What are we talking? 16, 17, 18%?
Like you said, I've been around a long time, and there's no logic to the opportunistic target returns. Because, if interest rates, as I said, when I started in the business, we had interest rates like 17%. And then, interest rates went down to negative. And through that whole time, the opportunistic has always been 15 to 20% and 1.5 to 2 times equity multiple, regardless of sort of the risk-free rate. And so that's where, we're still in that 15 to 20% IRR and 1.5 to 2 times equity multiple. And so that's where we are. And then that makes, does it make sense or doesn't make sense? It doesn't matter. I mean, we're an absolute return business. We're working for the promote anyway. So kind of regardless of what targets or people put out there, that's where we want to, as a business, that's where we want to get to. And so that's what we're driving for, is to say, okay, we want to generate the returns and we want to generate promote. The old saying, you can't eat IRRs.
Yeah, talk to me about working for the promoter and what that means, because you'll obviously take fees on the way for kind of managing that capital, but I'm assuming you kind of take quite low fees or just kind of cover your costs. But the way you get aligned is by smashing it out of the park, right, and capturing some of the promote and the upside.
Yeah, I think it's really, it's your business model and your culture, and what's your business model. And I'm not saying ours is the best model or anything like that. I'm just saying, if you look at your business, what is it? If you're a pure private equity shop, you've got a fee stream, and the fee stream is covering your costs and making some money or whatever, but that's not the main event. And so by that, we're not necessarily an AUM machine that says, all right, we're just trying to grow assets under management year after year, and we want to be 50 people and 100 people and 150 people and grow to be X, 50 billion, which is great. That's that was the Lasalle model or more the Blackstone model today. Our model is one where you're saying, all right, I want to create funds of a size where I can have the organization that's right size and the top level team, and then deliver promotes. And that is sort of a wealth creation model. Yeah. But it puts a lot of pressure on performance.
Of course. You touched on it a minute ago in terms of kind of sectors and asset classes. Where do you see the opportunity in the opportunistic space in terms of the actual asset classes you'll be pursuing?
I'm not going to tell anybody I have to kill you. Or what? 2 or 3 things. One, the business has changed a lot since COVID, right? And the business changed more rapidly. It's changing more rapidly and evolving over the last 10 years than the prior, 30. It always evolves. You're always trying to be at the front edge. But by that, when I mentioned the 2 main food groups used to be office and retail of the real estate industry for a long time, right? And now, retail became a dirty word sort of pre-COVID in terms of e-commerce, and then COVID really made it sort of the ugly girl in the bar, or ugly big guy, or whatever, ugly person. And then now, of course, office is the dirty word and the ugliest and the most. So, but you've taken the 2 main areas, and now you've got a whole swath of the institutional investor industry. I don't want to play in those, and I'm not in them. And so, and I'm giving sort of because it's an important perspective, like where's the opportunity? And so I'm not saying those are the opportunity, but that's interesting in that there's a whole swath where a lot of people have just blacklisted and put off, which used to be so then you have all this capital, less than there has been, but all this capital saying, oh, I like logistics, although now logistics, I just came back for this gathering where logistics was sort of number 3 in terms of negative perception. I think primarily because of pricing, because it became so attractive. Now people are saying, maybe
it's a bit
this is hot and overcorrecting. So now you've got another main food group, which is a bit, So now, of course, somebody says, oh, what do you want? Oh, I want data centers and life sciences, which means you've got all this capital looking for really, frankly, very, very small component of the overall industry. So I'm getting the answer is that it's much more in the current market, it's much more situational than sectoral or thematic. And that doesn't mean there are themes that Orion likes and themes that we'll do, but the opportunity set now is much more about the rescue capital and the impact of the dramatic rise in interest rates very rapidly and how people hit the windshield and the debt problems and the pressures that are coming. Now that might be an office deal in London. It might be a residential developer in Germany. It might be shortage of capital for it might be a retail pref rescue situation in Spain. But having said that, if you're going to go to any of these things, you've got to make sure you've got the new sustainable kind of property that will operate post-COVID world. Older secondary office in Canary Wharf, there isn't a price, right? And so it's very, very stock specific. And so rather than saying, oh, I'm going to, if I'm an equity investor and saying I'm going to buy tech, you're going to say, I'm really buying tech. I'm buying individual company or individual situation. And I'm really looking maybe to get myself in some kind of risk mitigated position, so that's pref or whatever. Now, having said that, there's certain areas that we do like at Orion. Residential across the world, across Europe, there's a shortage everywhere, particularly for just the mainstream. Now, the pricing and the dynamics have changed across Europe quite a bit. Northern Europe is getting pretty well hammered, but we're deploying, and I like deploying still in mainstream residential in Southern Europe. I think there'll be residential opportunities in Germany. And so there's a market which fundamentally your supply-demand imbalance is compelling almost everywhere if you can get into the right metrics. And I think there'll be a lot of residential situations that are capital starved or deprived and can't deploy and implement business plans. Hotels, everyone's talked about. We've successfully did this one in Rome recently. We've done a couple others. We're not a hotel expert. On the other hand, we can create them, we can do it. I think there's real money to be made in terms of value creation and on hotels and providing capital and expertise to reposition hotels. Although the surge of pricing right now, I think, is not necessarily sustainable. And so, residential hotels, but again, it's much more situational, which I call the rescue capital, which is super exciting. I think it's fantastic.
How would you define rescue capital?
Well, rescue capital is like, okay, you've got a deal or a portfolio where your financing is coming up or you've got a mezz coming up. The valuations have been now come down, pick a number, 20%. So you're used to have 100 million. Now they're only going to lend you 70. I'm 30 million short. And I've got a CapEx plan for another 20 million. I'm 50 million short. And where do I get it? And so I can't act. And not everybody, but you or your situation saying, I haven't got it. I need it. And so I'll talk and negotiate with somebody I know and trust to bring in that capital, maybe in a mezz, pref, preferred position with some sort of shared upside where we can still stay in the game.
So you can really take advantage of some distressed opportunities by being quite clever in terms of the type of deal you do.
Distress may be too strong a word.
Or motivated sellers or motivated...
people who have capital shortfall and capital needs that are going out and trying to do something to access capital in a market that's liquidity constrained, where bank finance is very difficult to obtain it's at low LTVs and very expensive. Equity, core capital is on the sidelines. Core capital today is very paralyzed because they don't have a price. So there's fairly few players, so you're get a liquidity constrained market and you need capital. And so is that distressed? Not necessarily. The banks may not necessarily be foreclosing or whatever, but you have a capital need in a market that is capital constrained and capital is relatively expensive. So it's a good opportunity. Yeah. This is called rescue capital. I wouldn't call it, it's not distressed necessarily.
Yeah, sure. over the last few years, we've seen quite a lot of single track shops set up, i.e. just logistics specialists or just residential specialists. You touched on as well in terms of maybe sovereign wealth or other capital shops allocating capital to big global institutions, to access their real estate offering, but also probably get involved with the other asset classes or the other investment products that they offer. As a pure play real estate focused platform who will not be constrained to a particular sector, have you struggled to raise capital, or has that been an issue just in terms of the wider dynamics going on in the space?
I mean, as I mentioned, it's sort of what investors need. Who do investors need to do what, right? So if you're a major sovereign and you've got a big team and a lot of skills and capabilities, then you're going to say, okay, I want to go into German logistics or whatever. And so you're making that decision and deploying, and you've got the skills and set everything to do that. But the majority of capital sources in the world don't have that internal team, the skill set, and the capability. And so therefore, that's where a group like Orion is saying, all right, if I'm a group in Malaysia, I'm a group in the US or Europe, I'm going to commit 50 million or 100 million or whatever, and I'm looking for somebody, a manager. And it's no different than, you have to think of everything in terms of investments or investments. So if you personally, Matt, want to invest in the equity market, you have the skill and capability to pick all the stocks or whatever. Or if you're big enough, you can have your own team. If you're not, or you don't choose to have a team in that thing, then you need to really, go with a sort of an Orion group. So the two sit by side quite happily.
Yeah.
So
you're the real estate shop, and you can take advantage of the opportunity.
We're looking for best relative value across Europe at any given time. We're sector agnostic.
Yeah.
And we have the benefit of having been in the markets for 30 years. People have been with us on average 10, 15 years, our senior management, 15, 20 years. And so we have that perspective and the ability to say, okay, is it residential in Germany today, or is it a hotel in Rome? And make that kind of, rather than if you're only in a sector, of course, that's what you like. Well, that sector isn't always necessarily where you should be deploying money.
Yeah.
And so it might be fine for the major investors as we want to go there, but as a business, if I'm, German logistics, that may not be great for the next 2 years. And so I think as a business, we prefer to say we want to see where there's the best relative opportunity. No different than an equity investor wants to look across the whole, stock market and say where are the best, money to be made.
What are you most excited about now as we kind of look forward to 2024 and beyond?
Well, this is we're no doubt we're in a great vintage again. So this is, it's not the same as the GFC, because the global financial crisis, you had, interest rates going down to nothing, so you could kind of pile in, and then afterwards all the tide rised. Now it's fundamentally different. We've got interest rates, so it's going to stay high, relatively high, and you've got, I mentioned, the shift in how real estate is used. But there's no doubt the next couple of years, this for a promote-oriented carried interest business, this is the time. And this is one of these great vintages where, because you've got massive value shift and changing, not only because of interest rates, because also how real estate's being used. So you've got lots of problems out there. At the same time, you're relatively liquidity constrained, not that much capital, and finance being constrained. So this is, clearly one of those great. So I'm excited to say this is a time we can make a lot of money. We can deploy and really create promotes, which was similar to the GFC, but with different dynamics right now. So I think it's kind of an Orion time. This is kind of why we were built. This is
perfect
our kind
time
of business.
to take advantage of
it.
it.
Our kind of time, right?
It would be remiss of me not to ask you about the deal, Panorama St. Paul's with HSBC. What can you tell me about that? Because it's a landmark.
Well, first of all, I can tell you, as I've said in life, I've been very lucky to have phenomenal partners. And that deal is Aref Laham's deal. So I'm not going to, so I'm here, but I'm going to, I got to give credit where credit is due, and it's his deal. There's a lot of, it's a very Orion-like transaction in that it was a failed, dropped out, and I'm not going to spend too long time, but I'll say a few things. The deal had fallen through from another buyer. We came in and bought it off the rebound after having done all the work. Secondly, got the planning to increase it from 350,000 to like 600,000 feet, which we'd done a lot of previous work on that during the whole bidding process. So that was huge, and that's very Orion-like in terms of value creation. But importantly, I'm going to back up a moment from the deal and just say, as we talked about, office, nobody likes office. Well, and I don't say I love office by any means, but Panorama St. Paul's and other things Orion is doing clearly demonstrates that this trend and I won't go over it, but the new state-of-the-art green high-end amenity building is super real. Let me tell you, Matt, this is not. And so we are achieving this across different buildings where we're pre-leasing super strongly at rents above pro forma because of the product. Because obviously the occupiers want to get their employees into the management wants their employees back in the office. And to do that means they have the best office at the best locations offering all the singing and dancing. So, and Panorama St. Paul's is the sort of poster child for sustainability. There isn't a greener building in all of London, 25-meter pool, roof terraces, and everything. So it's an example of these sort of corporates saying, I'm going to, and it's not about rent. I mean, obviously you negotiate, but you're paying twice the rent per foot you would ever if you're in Canary Wharf. Now, the corporates may be downsizing some, but it's not about that. It's about getting the right office to get my employees back in and make a green statement to the world. So that's Panorama St. Paul's in spades. But we have it in Lisbon, we have it in Milan, we have it in other markets as well.
Yeah, because you've got hotels and...
Yeah, but I'm talking about offices. I'm talking about...
in terms of offices, in terms of other locations
like an
across
office in Lisbon, we're doing office project, but they're green, state-of-the-art, and we're strongly pre-leasing. Now, so Panorama St. Paul's is a phenomenal example of, and Aref should be rewarded, kudos every which way for a phenomenal product, a value creation thing, and then the HSBC is sort of shows this stamp of what the corporates want today, right? From the beginning they wanted that green
badge.
Yeah, but also where the action is.
Yeah.
I mean, you see it in the West End of London as well. I mean, the West End's tight. The rents are going to do it. I was talking about, you talk to people at projects. But what happens to a secondary building at Canary Wharf? I don't know.
Right? Yeah, it's going to be interesting to see how it plays out.
The bifurcation of the market, which we all know about, read about, is huge. And so, but I'm not saying I like office, but selectively for the right thing, for the right product, you can do extremely well because the corporates, that's what they want and will pay for. Yeah.
Has your definition of success changed over the years?
Not a lot, actually. No, I mean, I think, when you're in an environment, like when I was at Lasalle, you're always influenced by where you are. And that influences your thinking and what you think you may want to do. And then when you're out of that and you're on your own, well, maybe you can relate, then you really realize, okay, what is success? And it's very different for different people. And so, I think I've been fairly good in touch with myself as to what I want in life. So one of the reasons Bruce, Aref, and I have been together in so much all these years is we have a very shared vision for having something that goes on beyond ourselves. And so it's not, and I'm not saying this is smart or whatever, it's never necessarily been about maximizing short-term wealth, which we could do in different ways, but it's always been about creating this enduring enterprise that Orion goes on well beyond us. And I think we're very, strong on that path and have done, there's still always things to do, but I think we've done pretty well on that, as well as wealth creation. But wealth creation, what's the right amount, how much, whatever, I don't know. But I mean, clearly that's a driver. So I've been driven wealth creation, but I'm not a pure materialistic wealth creation person.
You love the game, don't you?
I love the game and the building something, building the organization and having that for some reason does it for us. Other people maybe could care less. They build a house and sell it right away. You can make a difference to them. So it's to each their own. Or some people need very instant short-term gratification. Some, I've always had a longer view. So it depends on but for me, it hasn't changed too much. In terms of building that organization, the people, someplace where people, again, Orion, we're extremely proud in that the partners we brought in have been with us over 15 years. We're 45 people, but the average tenure is almost 10 years. And so we have a great culture. And I think success is also about, have I built or created a culture that I'm proud of, that I feel, and, within Orion, we have a very, very strong culture of what we believe and how we operate. And, that's not for everybody, but if it fits for you, then that becomes your home and you relate and say, this is my place.
Can you share just a couple of lessons about building a high performance culture?
It's a combination of high performance, but there's high performance, which is cutthroat killer Shark Tank, and that's fine. There's high performance, which is, my son was a rower where you're all in the boat, rowing together and your individual score doesn't even exist. And so we're a culture of always been high performance, working together, but collegial and mutually supportive. And so we're trying, and I think over time people realize that by helping you and helping each other, then the whole thing succeeds and there's enough for all of us.
And taking a very long-term view with that as well, clearly.
A long-term view, and not only yourself, but the organization, and doing what's best for the organization. I mean, obviously your needs need to be met. And so it has to meet your needs in terms of wealth or achievement or all these. But at the end of the day, you believe I'm doing that by supporting the overall organization goals than just my own narrow agenda, right?
So Van, you're obviously a global trustee of the ULI. Can you talk to me a little bit about who are the ULI and what does your role kind of involve
ULI
there?
Urban Land Institute. I'm a great fan of ULI because it's sort of for the people, by the people. So ULI is not for profit. Its mission is to really create the best practices in the real estate industry. It's 28,000 members or more in the U.S. and growing well in Europe. And so I recommend ULI to people become members because of not only the networking, but the skills and the sharing is quite phenomenal. And again, it's not for profit. But importantly, also I chair what's called the Urban Plan in the UK, which is a program that introduces sort of real estate careers in schools in less advantaged areas throughout the UK. So it's really creating diversity in the industry. And so Urban Plan does these workshops in schools, and it's quite fantastic. And so I think for all people in the industry, the ULI is an extraordinary organization in terms of sharing, but also skill, knowledge. And the Urban Plan is something people can get involved in that really helps diversity in our industry, bringing people in that might not have been introduced to real estate or property careers otherwise. And so, I encourage people to get involved in ULI. I'm a great supporter. I have been all my career. And so I recommend plugging in to the ULI.
Well, I'll make sure that there's a link in the description of this podcast so people can.
Oh, that'd be great. Oh, that'd be super. Yeah, both for ULI and then for the Urban. It's called the Urban Plan, which again is this program bringing workshops into disadvantaged schools throughout the UK, and now it's spreading across Europe. Quite strong. Fantastic.
Amazing. Well, look, Van, a question I ask everyone on the podcast as we draw to a close is, if I gave you £500 million worth of capital, who are the people, what property, and which place would you look to deploy that capital?
People, I mean, that's our business. So I don't, if you look what Orion is sort of doing without, giving away two or three things. One is, I believe in residential right now. We've been, and I would deploy across Southern Europe in mid-market residential for sale residential. I mean, I think for rent is interesting, but much more difficult in terms of social and pricing. So for sale residential for a portion of that across Southern Europe. I think Germany is going to have particular distress, and also in the residential area. So I would looking for residential opportunities across Germany in the for sale side. I think there's going to be lots of distress and pressures there. I would say, whether it's 100 million, I don't know the thing, that I would look for hotel situations that need capital to reposition. So repositioning and bringing up hotels. And then part of it sounds very Orion-like, which is what we say to investors is I'm agnostic. And so I'm not saying, I'm going to go to any sector or any country. I think today to have that capital to say, the rescue capital to go into situations and say, I can come in a structured, negotiated transaction where I've protected my downside by some sort of pref or mezz and participate the upside in newer state-of-the-art assets that are sustainable post-COVID. And we've been doing that, and you can do that selectively going forward. So, how I split between those depends how things go along. But Southern Europe, resi, German resi, some hotels, and, what you'd call rescue sort of preferred mezz. I think the preferred mezz debt business is a good one at the moment. Right.
One last question, because I think it'd be remiss if I didn't ask you. What advice would you give someone who's entering or kind of midway through their real estate career right now?
I was mentoring some people through the Urban Land Institute, the ULI. I should give a plug for the ULI. And I said, first, make sure you're really, it's really generic, everything, but follow your energy. Follow, what motivates you rather than try and do something that you think is like CV correct. And then half the people started quitting their jobs when I started like no, I didn't mean quit right
Have
away.
a plan, at least.
Yeah, have a plan. I mean, don't just say this is boring and I quit. I'm I'm still a great believer. Everybody's different, but I'm a great believer in still trying to go for the equity and getting into an equity side of the world rather than just something that runs only on fees or per hour or whatever.
So you mean like rather than be advisory is kind of participating?
But I mean, everybody's different. So I'm so too biased. I think real estate's a great career for young people. I'm still saying to people across I think it's a great business. I don't think it gets AI'd away or disintermediated or whatever. I think the human element becomes still very, very strong across the board. I think it's important, Matt, to write what drives you. Do you want a short-term gratification? Then maybe you're more a broker. Maybe you should be in a broker where you get it right away. And so I think it's very individual and very specific. But you've gotta work on your skills, analytical skills more than ever. I think analytical skills are hugely important in our business, that decision making. So we stress everybody to make sure analytics are super strong. And then because interpersonal skills are, in this business still great, you've got to work on all your interpersonal skills, whether it's negotiating, presenting, all that. So don't, get away from the screen and really work on and that's very old fashioned sounding, but I think that's still, as you want to progress and become a leader, you have to have those skills rather than just the, very good on a machine or analytics. And then really look at yourself and say, what do I like? What makes me, if you don't have the energy to put into it, then it isn't gonna happen. So it's not very useful generally. It's pretty generic stuff, I think. Specialization versus not, I think there's great. I think if you want to specialize, it's great. I think residential specialization, quite interesting if you want to do in hotels or whatever. So, we're generalists, but I think there's a lot of opportunity in specialization, as you mentioned.
Yeah, there's a lot of opportunity across the board. Well, look,
totally.
Van, you've had a phenomenal career. Excited
well, thanks.
to see.
We're still going strong.
It's still going strong.
A lot to do. Always a lot to do.
Clearly, you've got bags and bags of energy, and you're really excited about this next vintage. And I certainly will be watching what you and the wider Orion team go on to achieve.
Thanks, man. It's Orion's time. It's our kind of time. So appreciate it.
Love it. All right. All the best. Thanks, Van.
Thanks. Likewise.
Thanks for listening to this week's episode of the People, Property, Place podcast. If you found it insightful, feel free to share it with a friend or colleague. Give us a rating, like, or comment. It helps tremendously. It'd be great to hear from you on LinkedIn. I'm super open-minded to recommendations of guests that we should have on the show or areas of the market we should explore further. So do drop me a message. The People, Property, Place podcast is powered by Rockborn. The team recruit leadership and future leadership hires for real estate owners, funds, investors, and developers. So if you're looking to hire top talent for your business, head over to the website www.rockborn.com, where you'll be able to find a wealth of information. Or feel free to drop me a message on LinkedIn. Have a great day wherever you are, and I look forward to catching you